All right. Hey, everyone. Hold on. Just give me a second. All right. Let's get this thing started here. Just have to adjust my microphone. All right. Hey, everyone. Mark P. Markets here. Thanks for joining me for another Greenbridge Investing Market Analysis. I'm going to be focusing, of course, on Bitcoin, and we're going to update the analysis from the report that I published the other day, and also the stuff that I've been putting in the student chat room. So we're going to talk about that. All right, so if you're new to the channel, welcome. This is your opportunity right now to share the symbol or the market that you'd like me to analyze. All right, so we could put the whatever, if it's an altcoin, make sure to put USD or USDT after the symbol so that I get the correct one. Okay, and after I complete my Bitcoin analysis, I will then go through the chat and I will get to your symbol and we'll take a look at it and evaluate the price action. All right, so also for a fun fact, if you want to share what country or what city that you're from, that's always a fun thing to see. I'm broadcasting from northern New Jersey, also known as the greater New York City area. All right, and that's why I talk funny. All right, so let's get into this. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, a couple of things. So I'm going to go over the economic calendar. There's quite a few important things going on this week that we need to pay attention to. And before I get into that, I just want to mention a couple of things about the chat room. Okay, so I have this student chat room. I have a few people in there that are active and that are pretty much providing value. Okay, charts, they're asking questions and that kind of thing. That's what I want to see. So this week, from people that I don't see any activity from, I'm going to remove you, because this chat room is, I'm not charging anything for it. It's an opportunity to learn, but in order to participate in that opportunity, you also have to contribute, because I'm putting trade signals in there. I'm putting stuff in there that, you know, people for Greenbridge have to pay for. So this is not like a free room to just like do whatever and be like, oh yeah, I'm just going to watch what's going on. If you don't contribute, you're out. All right. So I'm not trying to be mean, but that's the value of the room. At some point, maybe what I'll do for people that just want to do that, you know, it's fine. Perhaps you don't want to participate. You just want to watch. That's okay, but I'm going to charge you for that, okay? So, you know, people that participate, I'm not going to charge you. All right, so now that we got that out of the way, let's talk about the economic calendar. So first things first, you should always check your economic calendar at the beginning of the week, because there are some times when you have very important scheduled economic events, right? And we're not looking to trade these events. We're looking to manage risk and see if adjustments need to be made or wide range expansions need to be prepared for. So let's start out here. Today is the 28th. So basically we're going into the first week of March. And what do we have here? So I'm just going to skip through today's stuff because this is pretty much, all right. So I think tonight, starting tonight, we have China NBS manufacturing PMI. Usually those aren't major market movers. Now tomorrow, tonight, 9:30 p.m. This is Eastern time, by the way. Australia, Royal Bank of Australia interest rate decision and their rate announcement. That could affect the Aussie pair, possibly New Zealand pair, but it's usually not a global market mover, right? So I wouldn't worry about like the S&P getting affected by something like this. Then we have on tomorrow, which is the 1st of March, we have Germany retail sales and harmonized index of consumer prices. Again, that's usually not a big deal. That's not a global market mover. I'm looking for big deals here, right? And I saw some earlier. Well, we also have Canada gross domestic product annualized. No one cares. Also, we have from the US, we have ISM manufacturing PMI. Usually not a market mover, so I wouldn't worry about that. That often comes out around 10 a.m. or 10:30 a.m. Eastern time. That could move the stock market a little bit, you know, if you're in certain stocks, but I wouldn't worry about it, okay? Then we have Australia GDP. Again, not a big market mover. On the 2nd, we have Europe. I don't even know what this is. HICP. Maybe that's some kind of inflation number. I've never seen that before, but I'm not going to worry about that one. We also have, for the US, ADP employment change. Now, often the employment change is it's almost like a preview of NFP, right? NFP is the most important scheduled economic event. So ADP could be a mover if there's some kind of surprise in it. So something to keep an eye on. We also have the Bank of Canada interest rate decision and their rate statement. All right, could move that pair, but I wouldn't worry too much about as far as global markets. Then we have Fed Chairman Powell testifies. That's on the 2nd. Okay, so that's Wednesday. That's important because whatever that guy says, if he hints toward whatever, being hawkish or dovish or whatever, the market will react, okay? So that is an opportunity for a wide range expansion, which means, you know, if you're taking trades going into that, you need to be prepared. Perhaps that means tightening stops. Perhaps that means getting out of your position early so you don't have to be exposed to that risk. Perhaps it means you make your stop wide so that you don't get stopped out and your position smaller. Only you can decide what that adjustment's going to be, but you just have to be aware that this guy is speaking on the 2nd. I don't know what time he's speaking, but he's testifying and he can hint toward things like a 50 basis point change in this upcoming rate hike, that kind of stuff. And whatever he says there can move markets. Now, if he may say nothing, okay, and if he says nothing, the market is going to get tight going into that, right? The market's going to get like erratic and tight. Volume is going to get smaller and smaller, and then he'll speak, and then, you know, we'll see what he says. But just be aware of that. It could be a non-event, but the way things have been going, he can start something that, you know, he basically, when a guy like that comes out and speaks, if the market was going to go somewhere anyway, and he says something that could move it there, it'll move it there faster. All right. We also have on the 2nd Australia trade balance, not a big deal. On the 3rd, we have US ISM services PMI. Those numbers are usually not major movers. Now, on the 3rd, which is also Thursday, we have Powell speaking again. This guy likes to speak a lot. So Chairman Powell speaking, he's testifying. Obviously, this is some kind of scheduled thing or whatever. So the markets may be erratic or very indecisive going into that. He's testifying for 2 days. So be aware of that, all right? That's going to increase the random nature. Also on the 3rd, we have Bank of Canada Governor Macklem. Okay, no one cares about him. On the 4th, we have Europe retail sales. Okay, that's Friday. And that probably comes out around 4 a.m. or 3 a.m. or whatever, Eastern time. And then on the 4th, we have non-farm payrolls, okay, NFP, which is the most important scheduled economic event, like I said earlier. That usually comes out, or that always comes out at 8:30 a.m. Eastern time, all right? That's a big market mover if there's any kind of surprise in it. I mean, recent ones have been negative, and the market hasn't been too happy with those numbers. Again, it's not about trading those numbers. It's about being prepared for the range expansion, okay? Also, what it means is understand that price behavior going into those reports tends to be more indecisive. Why? Because large funds or big money movers don't want to take the risk, especially if they have no idea or if they don't have their friends telling them where things are going to go, right? There's no inside information for them, right? There's a tendency to trade less or not take any significant positions because there's a lot of risk, right? And that's what a professional money manager, that's what they should be focused on. They're not little retail traders that think they're going to make money all the time gambling. All right, so that's the economic report. Again, so there's quite a few things this week between Powell and NFP, all right? All right, now let's talk about Bitcoin and this Bitcoin situation. And I see a lot of questions here, so that's great. Thank you, everyone, for asking these questions. Are those need to be signals? Okay, now, all right, I'll get to that, Kai. I see your question there. I have a signal room. I have a signal room in the student chat room and the student chat channel. There's a signal room. There's a signal channel. Only I can share charts in that signal channel, and those are trade ideas, right? It's clear. If you read the trade idea, it has a trade idea and it has a little explanation that goes along with it, and there's a chart. I put a long, which got stopped out, and I put a short, which I basically Is it stopped out yet? Yeah, the high right now is 41,610. It just got stopped out. Now, I don't short Bitcoin, right? I made that very clear in there, but it was for training purposes. So we can evaluate this. So that's why I put it in there. Or if anyone was aggressive, that short was actually worth about 1,000 points until this candle, right? Which came out of nowhere. All right, so anyway, let's talk about Bitcoin, and then I'm going to get to all your questions here. All right, so again, thank you for your patience. Now, first things first, I wrote in my TradingView article yesterday, I talked about Bitcoin basically testing the 35K support again and possibly breaking it, right? That was basically the idea of the report that I wrote. And here's the thing. That was based on, I wrote that on Saturday night, okay? That was based on the bearish pin bar and this sell signal right here. That's a sell signal right there, okay? And that's what it was based on. That's what the chart was saying at the time. It was coming off of a resistance level. It established a lower high with a pin bar basically, and that was a sell signal. So often when you have lower highs, a lower low will follow, or at least test of low. Now, keep in mind, I also put one of the risks in this area is the high risk of retrace. And what I'm talking about is this entire location here. That's a very high probability area for a reversal. So, you know, it's very conflicted. How do you go short? Again, I don't short. I have to make that clear. I wrote that in the TradingView article. I don't short Bitcoin, and I'm not about to start, right? Especially in this location. But there was a signal, and I addressed the signal, right? And I also talked about if something turns, you have to be quick to get out. Now, this is not easy to get out of because, I mean, it just came out of nowhere. So we'll talk about that here in a moment. But the point is this. The setup was there for a short, but the location, which is a broader support area, is a bad place to be shorting. So we knew that in advance. Now, whether you wanted to go for this short or not was really up to you and your aggressiveness or not being aggressive, right? I would never take a short in this area. I mean, if this was the S&P, I probably would have taken that short if this was the S&P, and I would have gotten stopped out, or I would have taken the loss or something like this. You know, once it broke this high right there, I'd be looking to get out and take the loss or whatever, right? There's no reason to hold this in hope. So now let's talk about this situation where we are now. And by the way, Stian, you can confirm, because Stian is one of the people in the channel, one of the more active people, you know, seeing the signals. I wrote on the signal for that short. It's for training purposes. Okay, I wrote this on Saturday night. It's for training purposes, and I have no intention of taking it. I wrote that. It's clear. It's in the text. I don't adjust. When I put those things in there, I don't adjust them after that. Like, that's it. They're there. Okay, so it's not like I'm going to change the words or whatever for my convenience after the fact. I don't do that. Now, let's talk about this situation right here. Because I see here Dan asks a question, you know, how can he miss this pullback a third time in 5 days? You're not missing anything, Dan. You're not missing anything. Markets are random. So what you may be missing is the idea that this is a general support area. I've been talking about that for a while. It's generally a support area. In order to catch something like this, you're not going to catch something like this on a daily chart. You need to watch this is really like a day trade type of move. You need to watch, I hate to say it, but you need to watch like a 5-minute chart or a 15-minute chart, possibly even a 1-minute chart. That's where you're going to see the reversal, but you have to watch this thing all day. It's not practical. And this type of move comes out of nowhere because of some news, right? They came out with some news or whatever, the Ukraine situation, some blah, 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 whatever it is, it just comes out of nowhere. So what you're missing is the markets are random. All right, there's no way to catch something like this. It only looks good after the fact. So all we can see before the fact is that there was bearish structure in play, lower high, lower low, likely in an area where there's a high probability of reversal. But daily candle, this is very hard to take as a long, right? Unless you're going to take the long above this high right here, which, what is that, 39,886, right? You'd have to take that long on this breakout, which, again, if this happened, let's just take a look at a 30-minute chart here. If this came, look at this. Look at the price action, okay, going into that. It was really trying to develop a lower high, and then what? Look, out of nowhere, right? These are 30-minute candles, out of nowhere. So you're not going to catch that, all right? There's no way. It only looks good after the fact. You need to watch this thing. Like I said, let's see, on the 5-minute even, here's a 5-minute chart of Bitcoin, okay? Even here, you would have to be watching this, and you'd have to recognize this minor support. You'd have to recognize these break of these minor resistances and possibly take that in what was a consolidation before that, right? So it's either you're going to take that or you're going to take this breakout here. And again, this is easy to talk about after the fact. But before the fact, there's many, many times where you'll see situations just like this. And you're like, all right, I'm going to buy the breakout. And you buy the breakout and it fails, right? That's the nature of a smaller time frame. In fact, this little breakout here, right? This was actually a breakout here. If you were watching this, right, and you took this little breakout here, right there, you got caught in this, which, will most likely knock you out for a loss. And then when it goes there again, you're going to miss it. Like, that's random. So there's no way to catch something like that. You have to really, really be on top of this sort of thing. And it's not practical. All right? It's not practical, especially when you're trying to throw around large positions. It's not practical at all. Like if I was managing a large amount of money, like other people's money type of thing, I would never trade like that with that type of money, because you can't win. You can't beat that random behavior of the market. Believe me, I've tried. All right, so anyway, so as far as Bitcoin now and what to expect now, there's a higher low in place, okay? It's established. We're going back into resistance levels. This whole section here is resistance. Now, with the higher low and the structure trying to change, I'm not going to put a lot of weight on this. The reason why is because this entire section right here, right now, this section, now let me get rid of this little box so we don't get confused. That section is a consolidation, okay? So if we're going to stay in a consolidation, I anticipate that it will stay there until it does something new, like break out. And it's got all this resistance it has to deal with, okay? It's got all this resistance here that it has to push through to really prove anything. So I'm going to suspect that we're going to stay inside the range, which means if Bitcoin pushes into like the 45K area, something like that, that would be a place to be taking profits or taking, if you're aggressive for the short again. I'm probably not going to do that, or if I do it again, I'll make it as an educational call. I don't like shorting this thing, and I don't take any shorts myself. Okay, and I don't want people getting caught in this thing if there's an aggressive breakout. But the point is, this is not a place to be buying. Okay, that's definitely not a place to be buying. It's a resistance. Now, if Bitcoin is going to change its structure, it needs to clear this resistance first. There's a possible change in play with this higher low situation, but that could also be part of a consolidation, right? We don't know yet. There's no way to know. So we have to see how price action plays out. And if this is just a reaction to some kind of geopolitical news or whatever, then there's nothing behind it. It's just meaningless, right? Meaning it's probably not going to follow through. It's less likely to follow through. So it'll go up to a point, it'll suck a lot of people in, and next thing you know, it'll be pushing 35K again, right? So you have to look ahead and you have to consider the variables that are affecting this thing, right? Now, the S&P is negative today, and this thing is strongly green. That came out of nowhere. Before, this thing was pretty much like in lockstep with the S&P. So relationships change. That's why you can't think in absolutes, and you can't think you know anything, right? You have to basically accept that we all know nothing unless you have inside information, and you have to accept that markets are random, and you have to respect that random nature. Otherwise, you're going to think like you're missing something, right? And you're not. The markets are random. That's why there's really very little skill to this game. You could be in this game for 10 years, okay, looking at 1-minute charts, and in 10 years, you will still be in the same position as you were 10 years earlier, because there's no linear skill. It's not like when you're learning to play the piano or something, and you practice your techniques and you practice your scales, and in 5 years, you go from not being able to play anything to being able to play some kind of very hard classical piece of music. That's a skill, right? You grow, your skill grows over time. In this game, there's no skill. That's why a beginner can come in with no regard for risk and throw a lot of money at the market, and the market just randomly rewards the beginner, and the beginner thinks, oh yeah, I got this, right? That's no skill. And we saw that type of environment over the previous 2 years where people just, oh, buy the red. I remember seeing fake gurus, just buy it when it's red and it'll turn green, right? No skill. When the market gets hard like this, the only thing you can do is respect that random nature and mitigate risk as much as you can. Always be looking at the risk, not the reward. All right, the reward is going to cause you to lose more. All right, so that's what I have to say about Bitcoin. So as far as right now, there's no reason to react to this. I would be, like I said, I'm anticipating range-bound market. High probability location is going to be this lower area. Look at this nice pin bar bounce off of that low. This line was on my chart before that pin bar bounce. All right, that's a support area. So if price can test that area again, that would be nice. That would be a high probability location if it can give you something to work with, you know, or anywhere in this zone. That would be a good place for a potential long, unless it starts breaking. But I would expect this thing to stay in a range unless it makes a new low. And what I mean by new low is it needs to take out that low, like the 30K low. Needs to take it out. Okay, what is that low? That low is 32,950. So basically 33. If we take that out like decisively, meaning we're at 31.5 or pushing 30K, that would be a new low, and I would be anticipating the momentum to carry this thing lower. Otherwise, I'm anticipating range, and any type of test of support is a possible swing trade long opportunity. Okay, and that's, again, that outlook is for the coming week, possibly 2 weeks. Again, things change quickly. If there's any skill to this game, it's about adjusting. Okay, not reading a chart, not saying, well, I know 10 oscillators, they're meaningless. It's adjusting to the new price information and managing your risk. That's the only thing we could really improve on. Okay, like a poker player. How does a poker player make money? By managing risk, not by being really good with the cards. All right, because the cards are random. That's why, again, just like in this game, a beginner poker player can come in, no regard for risk, go all in, and the cards just come out his way. Right? I'm good at poker. No, you're not. The cards came out your way. All right. So let me get to your questions now. So that's my Bitcoin analysis. Let me know if you have any specific questions about that. By the way, this is probably going to affect a lot of altcoins in a similar way, and we'll see once we start pulling up those charts. Okay. All right. So let's get started here. Shayshank, hey, good to see you. Man, it's like 4:30 over there in his country. Thanks for stopping by. It's always good to see you. Stian, could the current candle be a result of geopolitical situation? I suspect, Stian, that it is. The starting negotiations between Russia and Ukraine, because there was no candle, right, to answer your question, no, there was nothing. There was no bullish pin bar at that level. There was no inside bar. There was a sell signal, okay? And the sell signal got negated very quickly. So that's all there is. That's random. So that answers your question there. Now, is it because of okay, again, I have no idea with the institutional stuff. I never put any weight on that. Like, oh, it's the beginning of the month, so institutions normally do this and that and blah, blah, blah. They do until they don't, right? So I never put any weight into that type of stuff. I let the price tell me what it wants to do. And again, there are going to be times when stuff just comes out of nowhere, all right? And that's where if you properly manage risk, like that short idea that I put out, okay, for training purposes, I have to be clear, the risk was 3,000 points because I thought that was pretty much reasonable risk. This thing has no business going 3,000 points higher from 38.5 if this thing is going to maintain the bearish momentum. And here we are, 3,000 points higher, right? Out of nowhere in one candle. So now it's a loss of 3,000 points. That's the risk that you have to accept in advance. And I would not hold on to something like this short if I was short. If I was in the S&P and the S&P looked like this and I was short, I would be getting out, or I would be out. I'd get stopped out, and that's it, because this thing, who knows, right? This thing can break those resistances, and you don't want to get caught in one of those type of positions, right? You have to be open to anything. All right, so hey, Mr. Plow, good to see you. What about DOT? What if it would create a pin bar? This is a bullish sign. Okay, let's take a look. DOT, all right, USDT. So like I said, a lot of these altcoins are probably going to try to behave in a similar way. Now, of course, Bitcoin is the leader, right? So you should always be comparing these things to Bitcoin. Look at this situation here. Similar failed low. Look at the pin bar failed low on DOT. Pin bar failed low, okay? Similar to that Bitcoin situation. But the recent structure on DOT, we can see, is a series of lower highs and lower lows, except for this double bottom situation here. Now, as we know from my students know, these type of double bottoms, the low to the low is not very close together, right? That's pretty far apart. It's about like a month and a half, maybe 2 months there, something like that. That's where, when it gets like that far, that's when you have to start putting less weight on it. I mean, it's still somewhat acceptable. Like, look, this low to this low, right? That's a double bottom. That's pretty much an acceptable range. But when they get too far apart, you just have to be weary of it. Like, for example, they say, oh, look, this is a double bottom right here, okay? Technically, it's a double bottom, but it's too far apart, right? So those, I put less weight on those. Although I'm aware of them, and I know that the level may be meaningful because since that double bottom, right, if you want to call that a double bottom, the general area had buying activity numerous times, right? Now, as you can see, the buying activity, there was no follow through, right? So if you took those long trades, which there may have been some justification of that, you could see they turned red pretty soon, right? Pretty relatively quickly. So you have to be prepared for that. When you take a long trade, especially when you're going against the structure, you have to have lower expectations. So the reason why I mention all that from there is because we're still in the same situation. None of these resistance levels have been taken out. Okay, you have this old support, new resistance. You guys know how that works. Okay, my students. And until that resistance is taken out, there's nothing that says that this structure wants to change just yet, even though we keep getting these buy signals. So buy signals in a bearish environment are lower probability. They're much harder to deal with. All right, and you have to have very low expectations of them. You can't expect them to like, that's why I say in the channel, in the signal channel, I put, if you can get 1-to-1, that's a win, because you're dealing with a lower expectation environment for longs. But should you short these things? You're shorting into support levels. It's very conflicted, and you have to decide, which side you're willing to take that risk on. For Bitcoin, I'll still look for the long signals, even though the environment may be bearish. I just recognize that you may have to get out of them quickly or whatever, because the structure is not favorable, all right? Or just avoid them altogether at some points. It depends. But anyway, so as far as this goes, I wouldn't do anything with this here. You asked about the possible double bottom coming after this. Yeah, that would make sense. That if you want to take an aggressive trade, but I would look at this only from a swing trade perspective and no longer than that, because again, the structure is not favorable for investing. Okay. And if you want to just have some sort of gauge for investing, just go to total, right? This is the total market cap. I think, in fact, Kai is the one that introduced me to this. Just look at something like this. Looks just like Bitcoin. You can argue that there's possible some structural change possibly going on here, but it's still too early. This is a much more significant resistance. So I'd want to see that cleared before, I would say that you want to start investing or holding on to these things with longer time horizon expectations. Does that make sense? All right, so let's go back. Let me see what else we have here in the channel. So okay, so I answered that question. Kai. Okay, dollar and DAX. All right, let's start out with the dollar. I'm going to go one at a time because I want to make sure I answer everyone's questions, and then remind me again, Kai, if you're still in this stream. After I answer the questions, ask me again about the DAX. Okay, so let's take a look at the dollar index. Now, the dollar index is tricky, and this is obviously going to be very important for Forex, and it's going to be very important for the future of the stock market. Now, we're in this trend. It's clearly, right? Step one is trend, clearly bullish, higher lows, higher highs, clearly. Now, we have a higher low over here. What is that, 95 basically, right? We could round that to the whole number, 95 area. That right there is the main level that I'm using to judge this trend. And as long as the dollar can stay above that, I don't care what it does here. I really don't care because it's a consolidation, right? The dollar, even though you can argue, oh, the double top on the dollar, the dollar's bearish, the dollar's in a bear market. Dollar bearish, nothing. That's so what? It's still part of a consolidation. So we have a range high up in here somewhere. We can use this as a reference point. There's your range high, which is what? 97 basically, 97 and a half. And then you have your range low at 95. As long as price stays inside of this range, I don't care what kind of price action it gives me inside the range. It's going to be random. You might as well flip a coin as far as like what it's going to show you. But as long as it stays in there, it's a higher low. It's a broad higher low. It just needs something to get it going to break out, which means if the dollar is, if we're going to judge the dollar as generally strong, which is what this says, that means Forex pairs like, euro and pound and all those things that trade against the dollar are going to have a hard time. They're going to be generally weak. So I would be looking for resistances to be respected in those markets. Gold is going to have a hard time. Now, gold has been wild, again, because of this situation that we have, this geopolitical situation. It's funny, months ago, people were saying, well, gold is obsolete, and, Bitcoin is the new gold because that's really the true store of value, blah, 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 blah. Bitcoin was struggling, during this whole Ukraine situation, Bitcoin struggling between 38 and 37, whatever, while gold went to 1978, right? So you tell me, what does the market tell you? The market knows everything, and the market is always right. So I will believe the market before I believe people. Gold is a store of value. Gold is not obsolete. Now, but with that being said, with the dollar in this bullish configuration, I wouldn't have high expectations of gold. All right, that's why I just have to, whenever we talk about the dollar, we have to talk about gold and we have to talk about bonds. So real quick, the bond market, because the bond market is what controls the world. All right. Now, the bond market, look, the bond market's been rallying, which is unusual, especially in the face of what we're going into, a rising rate environment. But rallying, I have to use that word lightly because, yeah, we have a higher low, but this is it's very short term, right? The general structure here is bearish. We have lower highs and possibly, a lower low coming. So we have to look at the resistance levels. There's one basically right here this is the 10-year note, and then we have like one in this area right there. So we're basically in a resistance zone. If this thing breaks out of here, then maybe we have a change, okay? Because the bond market, again, knows everything, and it knows everything in advance. This thing was 6 months ahead of Powell coming out with his changes, with his, his interest rate plan. So if this thing, I wouldn't consider this a change just yet because the bonds every few months, every quarter or whatever, they change their contracts or whatever it is. So you get these weird gaps and stuff like that. So that's why I'm not going to give this any weight, all right? What I'm going to look at again are the levels. As long as those resistances are respected, then I would be anticipating a lower low out of the bonds. I mean, that makes sense in a rising rate environment. So we'll see how that goes. Now, if the bonds change their tune in the middle of a rising rate environment, that means the rising rate environment is going to be temporary. And then Powell will probably change his mind again. Because, again, the U.S. government can use the bond market to do their engineering without having to say anything, right? They can buy bonds or sell bonds and treasuries, and they're basically moving interest rates without having to say anything, right? And interest rates, again, control the world. So something to keep an eye on. It's interesting, but I wouldn't worry about this just yet as far as, dollar going back into bear mode. Because if the bonds rally, if the bonds break out, right, and they start doing something really bullish, that means we're looking at inflation, like hyperinflation type of thing. We're going back into that scenario. So we'll see. All right, but it's too early to make those type of judgments. All right, so Kai, thank you for asking. So Stian, markets are highly random. There doesn't need to be a candlestick pattern. Right, putting narratives over price action. Right, no, I agree with you, Kai. Yeah, it's just you have to just accept the random nature. And see, candlesticks, people put a lot of weight into candlesticks. Candlesticks are valuable, but you have to understand that their appearance is also random. They can appear wherever they want, right? It's the location that gives them any value. But I find the most valuable thing about a candlestick is the ability to help you measure the risk, right? Is the risk too high? Is it too low? It gives you a point of reference. That's what I think one of the more valuable things are. Yeah, sometimes it's going to get you stopped out early. I was long Bitcoin, right? We had that long Bitcoin at 38.5 previous to that short idea, and that got stopped out on the bullish pin bar, right? That got stopped out. I called a long. The guys in the chat room can confirm that. I called a long over here on this candle, okay? And I put the stop just below the candle, and then we had this wide range pin bar, which stopped the trade out for 2,500 points, right? That's now look where we are. So that's going to happen, right? That's the nature of this game. So, you know, does that bother me? No, I've been through that a million times, right? It doesn't bother me. It's just now I have to wait for the next one as far as swing trades go. Okay, so anyway, so thanks for mentioning. Okay, so now Dan, so I answered this question third time in 5 days, so I answered that. No, you're not missing anything. This has been to trade with erratic, right? Either trade your system like a bot or stay out. Right. Kai, that's exactly right. You have to trade this thing with as objective as possible. That's the whole point of my 6-step process, right? Is to help you be objective, have a set of some sort of rules. Now, of course, the 6-step system is not a set of rules to set up trades. It's basically to give you perspective so that you can assign some sort of probability to what is likely to happen next. Okay, on the short term, what we're looking for is we're looking for those situations where the random nature is the lowest, right? That's what we're looking for, and that's where we want to place a bet, because that's when we have a better chance. Otherwise, everything is 50-50. And you have to understand, there are 3 layers of obstacles in this game. No fake guru is going to talk about this, ever. All right? You're never going to hear this from a fake guru unless they copy what I'm about to say. So there are 3 layers that you must get through. Right? The first layer is yourself, which is human nature, right? We all start out with that, human nature. It's a liability in this game. It's going to lead you to the wrong things intuitively. People like to do things by feel or intuition. It's wrong because we're in a random environment. Okay, so that's the first obstacle that you need to get over, is your own human nature, and it's not easy to do. We grow up thinking certain things, and we have certain experiences that confirm certain ideas, and the market doesn't care. The market is random. So that's the first thing. The second thing is there's an entire industry out there that basically looks to profit on our activity. So all the information that they're going to shovel in our faces is going to be for us to be active, right? So trade more is better. Here's 1 million oscillators, all this and all. So all of that causes friction. Why? It's going to make you trade more, and there's going to be a cost. So now you have human nature, you have the cost, right? So every time you do something, it costs you something. And then there's the random environment, right? Which is the third obstacle, which a lot of people don't seem to want to accept. But it's random, right? Markets are highly efficient. They're not getting less efficient anytime soon. All right, 20 years ago, when I started out in this game, actually more than 20 years ago, there were a lot of inefficiencies in the market that could be exploited. At the time, I had no idea. Like the place where I worked, everyone made money, lots of money. And you know, it's just at the time I was too dumb to realize how we were making all this money. I just thought it was normal. Oh, it's a skill. You just get good at it and you make more money. No, we had a very, very specific advantage that was capitalizing on a very unique inefficiency, which no longer exists because market making firms have taken all that money out of the market, or they continue to take that money out of the market every day. Right? That's why it's these day traders, unless there's really wild moves, they don't make any money. They don't really make any money. You have to sit there for hours and hours and hours. It's not worth it. Okay? It's really not. It's not. You're not going to make $20,000 a day or whatever, like guys used to make back then in a couple of hours by putting on 1,000 shares of this or that, because markets are more efficient and we don't have that speed advantage. The market maker has the speed advantage on you, right? So they can make that money, not you. All right? So those are the 3 obstacles. that you need to realize. You know, if you want to, by understanding that, it will give you a better chance of managing your own risk and your own capital and your own expectations. All right. So anyway, I'm going to make a video about that. When I start up I'm going to start up a YouTube channel, you know, for my training situation, my training program. But that's going to take me some time. I got a million things to do. But I'm going to talk about topics like that. Anyway, all right. Let me move on here. That was my rant for today. That was my rant. I got to do some Seinfeld impressions. Otherwise, that Seinfeld guy who I always make him angry, he won't be angry at me. All right, let me see. So, Kai, again, we are watching into a possible restructuring of the global financial marketing. That's yeah, I agree, Kai. Whenever there's uncertainty in the market, where's Bitcoin right now? Up 4,000 points. I mean, the thing is moving, you know, as I'm talking here, just going higher and higher. Yeah, it's true. When there's a lot of uncertainty, the market wasn't expecting this or that, you get a lot of wild stuff. And the only thing that's really going to help you in such an environment is knowing your levels and anticipating certain behaviors around those levels and being prepared to be wrong. Okay? Being prepared to be wrong is the #1 thing that you should do. Hey, Chris, good to see you. Okay, Gabriel, hey, good to see you. Nick, good to see you. All right, thanks for stopping by. All right, Peter, hey, Peter. Can you look at Cardano? All right, thanks. And be the way, nice signal by Greenbridge, good money. Oh, nice. Okay, cool. Yeah, that was Andrew called a couple of those. He called a long on Bitcoin, which was, I thought that long was a little aggressive, but hey, that one's working out. Okay, mine gets stopped out, but his worked out. All right, no problem. Let's take a look at Cardano. So again, look, these things are going to be, with that kind of Bitcoin move, you're going to get little pops and perks, little pop-ups out of these things, right? Look at the pin bar over here, and you're getting this. So it's going to suck a lot of people in. Again, look at these lines. Obviously, I left these lines on my chart from previous streams, right? Now, they were support lines. This was a support line, and it's broken. So as you know, Peter, this is probably now going to be a resistance line, right? So as far as promising, no way. Like if you're looking for like a swing trade and you're looking to make like 50 cents or something like that, okay, fine. You want to see if you can get something out of that going into this resistance line here. You're going to have to risk, if you buy this thing right now, you're going to have to risk, what is that? Let's see. The bottom of this is 84 cents. Is that the bottom there? The bottom is 84 cents, right? And the high is 95 cents. You're looking at about maybe 12 cents of risk. Maybe you want to round that to 15 cents of risk. You need to make that at least to justify that as a swing trade. And you're facing potential lower highs because, again, this structure hasn't changed. And as far as longer term trades, I have no faith in these altcoins at all. They're garbage. All they do is make the developers rich, okay? They're useless to us. Now, the reason why I'm so confident about that is not because of I just happen not to like altcoins. That's not the reason. The reason is we're in a rising rate environment, right? That's the reason, interest rates. And anything that's highly speculative tends to underperform in these harder interest rate rising environments. Why is that? Because interest rates take money out of the market. When they're rising, it costs more money to borrow money. When they're going lower or they're staying flat or whatever and they're cheap, then it's easy to borrow money, right? And all this money borrowing, right, goes into other people's pockets, and then from there, you know, people have all this extra money. It finds its way into highly speculative assets. That's where bubbles come from. So in this type of environment, money is coming out, which means altcoins are going to have a hard time, most likely. Small caps, growth stocks, they're going to have a hard time. Value stocks should do better because they usually give you an incentive to hold on to the stock, and they're usually good investments. They're usually good companies like Intel, right? Not garbage altcoins that produce nothing. So just something to keep in mind. Now look, will we never be in a speculative market again? That's not true, right? Of course, it's a cycle. At some point, the rates will change and money will come back into the market, and these garbage altcoins, there'll probably be new ones at the time, they're going to go from $0 to $100, and everyone's going to be rich again, and you're going to see all the fake gurus on YouTube make billions of dollars, blah, blah, blah. You're going to see it all again. It's a cycle. All right, so you want to be prepared for that, but understand that cycle is not going to start anytime soon. We haven't even begun the rate rising yet. All Powell has done is talked about it, right? And he's going to do it. We haven't even started the rate rising yet. So we got some time, probably a couple of years. All right, it's just to give you some perspective. Anyway, thank you for asking about Cardano. A lot of people are going to get sucked into this with hope. Don't get sucked into it. Understand what you're dealing with here. Okay, Chris, it's tough. Markets all over the place. Luthando, hey, Dot. All right, so I covered Dot. Thank you for asking. I'm so excited for this moment. Okay, Nick, all right. Gabriel, can we have a look at Luna and then Ethereum? All right, sure. So what I'll do is I'll take a look at Ethereum first because that's probably more popular. Now, do me a favor. Ask me about Luna again as I'm wrapping this thing up, all right? Or once I finish with everyone's questions, because I want to get through as many questions as I can. I tend to talk a lot, and by the time I finish talking, I miss people's questions. So let's go to Ethereum, all right? Is this my Ethereum chart? Let me see. No, that's not the one. Hold on. Let me find my Ethereum chart. It's probably this one here. Yeah, okay. So, look, Ethereum is just a repeat of Bitcoin. Right? It's the same thing. It's the same chart. It's just the price is cheaper. It's the same deal. So you have the bullish pin bar, okay, followed by this. Look, there was a sell signal in Ethereum. And those sell signals, I encourage people, like if they're long, I encourage people, adjust, get out. Right? That could have been a loss for people, or maybe a small profit. And now they're like, oh, look at this thing. It's higher again. That's the possibility that you face. There's no way to see this coming. There's no way to see that coming, right? So now, again, the intuitive thing to do here is to react and buy it because, oh, it's strong, high or low, and breaking out. You're just reacting. Don't react. Look at the resistance levels, okay? That's your resistance. You got one there. You got one over here, right? That's just like Bitcoin. It's a resistance zone. So in that type of situation, right? If the beginning of the zone is there, do you really want to be buying into this thing with the zone like right there? Can it break out of that zone? Sure, anything can happen, but I think the probability isn't very favorable right now, especially since this is just a reaction to whatever, geopolitical blah, blah, blah. If they say, oh, we're going to negotiate, and then the next day they say, no, we're not negotiating anymore. This guy, I don't like this guy, and blah, 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 right? And they start yelling at each other in Russian. And then this thing's going to turn right around, all right? And this pin bar is just nothing but nonsense and a reaction. Don't react, okay? The natural thing to do is to react to what we see. That is characteristic of the herd mentality. If you react to things that you see on a chart like this, you can't win. You'll win randomly, all right? But overall, over time, you will not win, especially with the other things like I talked about, the friction and the random nature. So you have to anticipate. And this is not really a good spot. I mean, if you're aggressive and you want to go for that, okay, but your risk is going to be defined by this area here. If price breaks, like if you buy this right now, you're looking at, what is that? 28.40 is the high, right? And the low is 25.70. You're looking at about 325 or 330 points of risk at that point. Can you make 300 points in this thing, or 350 points, or 400 points? It's going to be tough, right? You have a lot of resistance to deal with. So I don't think it's worth it. And I would rather wait to see if you can get a retest of this area. If you're going to do anything, that's the area to do it, the lower area there. What is that area? 2,300, okay? Now, at the time, this, by the way, that pin bar developed, the week before when that whole Russia thing was getting really heated, right? And the market, the S&P was minus 100 points overnight. That's when that pin bar appeared and reversed. So no one saw that coming. I'm sure there were a million people coming out calling it a short and blah, 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 and now they're stuck, okay? So that's an area to be long. I talked about it. I've been talking about it. Same with Bitcoin. So look for that area. See if price can retest that area. Now, what if price never looks back? That's also a possibility. What if it never looks back? Well, if it never goes that low, it's got to pull back at some point, even a minor pullback, and produce a higher low somewhere along the way. Then that's the setup you're looking for. Okay? You have to wait for it. That, what I just described, can take 2 weeks to develop on this time frame. If you don't like that and you want more action, then you're going to have to look at smaller time frames, like a 4-hour, like a 30-minute, like a 15-minute. But let me tell you, the noise is greater. You're going to have a lot more stop outs, and the cost is going to be much higher. If you're not an experienced day trader, it's not worth it. Okay? It's hardly worth it even if you're experienced. All right. So anyway, so good question. That's Ethereum. I'll get back to Luna. Let me just move along here. All right. BitConnect. Okay. Nick, I don't know. You're getting a little out of hand here. Hey, Kai. So 2 charts per week. Are those need to be okay? Oh, so Kai. Yeah. So to answer your question, no, 2 charts per. So I'm asking for people to, if you want to be in the chat room for free, then I'm asking people, because now you're my analysts. That's why I call you the analyst. The room is called analysts, right? I want 2 charts from everyone. They don't have to have trade signals on them, Kai. If you read the instructions, I wrote like a little instruction thing on the pinned messages. Does not have to include a signal. I just want to see observations. I want you to use the 6 steps and just, you know, if there's no signal, hey, no problem. If there's no signal, there's no pin bar, like there's no candlestick, there's no chart pattern, that's okay. What I want to know is what you'd be anticipating. You know, like I had, what's his name? James, one of the students, he put some Forex charts in the room, and he put, you know, we're at a support level. I'd like to see a double bottom here, or, you know, anticipating a double bottom, pin bar, blah, blah, blah. Okay, fine. There was no double bottom there, but he was saying that's the level that he'd be looking for something like that. That's all I want to see. All right. So again, I'm not trying to make this like hard. I'm not trying to make this like a job. It's an opportunity for you to practice, for students to practice the 6 steps and to share notes with others, you know, so others can see what you're doing and that you can look at their charts and that sort of thing. In fact, Kai, what I'm going to do is I'm going to create a separate channel for just charts. Okay. So all the students can put their charts in that channel, and all you'll have in that channel are charts. And then the conversation will be for the analyst channel. So if you have questions or blah, 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 you can put that in the analyst channel, which you see now. I have not set up the chart channel yet, but I'm going to set up a chart channel. All right. Anyway, so thank you for asking. All right, David. Hey, good to see you, David. David from Miami. I love Miami. Miami Beach. Okay. Steen, it doesn't need to be signals. Okay, right. So Steen answered my question. All right. I should have looked at that earlier, Steen. Thanks for answering my question. Alex, Romania, right. I've been worried about my Romanians. How can I be part of the chat room and pay? Well, Alex, that's not set up yet. It's just an idea I was thinking of. It's like if people want to just like do nothing and they just want to watch, okay, fine, you can pay. But I haven't set that up. But my plan is that, right? Otherwise, if you want to be in the chat room for free, which is, you know, everyone right there, I had no intention of charging for this chat room. It was a place for students to practice. So in order to get in there, you have to be a student, right? And even when I start up that paid version, it's only going to be for students, all right? Because I don't want people going in there who have not gone through the 6-step system and then asking questions that are going to hold the chat back. I don't want people going in there and asking questions like, how come you guys don't use the RSI? All right? Because I don't want my students shouldn't have to put up with that, all right? They went through the 6-step system. They know why we don't use the RSI. So that's why I want everyone in there to be on the same page. Right, so you have to go through the training program. All right, so thank you for asking. Stian, okay, no problem. Right, okay. Peter, if you will have time, can you look at gold? Yeah, okay, sure. Yeah, we can take a look at gold. So I mentioned gold earlier, right, with the dollar situation. Let's take a look at gold. So gold has been wild. Look at that. Look at that touch of 1978. You notice I had a line sitting up here. I had that line up here for a while, right? What was that line based on? It's based on this high over here. You notice that? That goes back. What's the date here? That's January. That's January of 2021. Okay, that resistance was significant, and look, it touched and sold off dramatically. Gold is all over the place in this environment. Like I was saying, I would not put a lot of weight into gold being in a bull run. When you see gold doing these wild things, you're going to see a lot of talk. You're going to see a lot of conspiracy theories. You know, gold is going to 5,000. Now is the time to buy as much physical gold as you can. Blah, blah, blah. Right? You're going to see lots of that. Ignore it. Please ignore it. Gold is still in a range. So if we look at a weekly gold, all right, let's take a look at a weekly gold here. Okay, look at this on the weekly. So gold is basically this. What you're looking at here is a very elongated wave 4, right? It's an Elliott wave 4, and it sucks being in this. If you're like in this and you're trying to like, you know, you think every time it breaks out it's going to go somewhere, and you believe all the fake gurus who claim to be gold experts and blah blah blah. Okay, it's all nonsense. So here's what you have to keep in mind: gold is in a range. And as long as the dollar stays strong and the dollar stays above 95, most likely, now again, there's no guarantee here, of course, you know, but most likely gold is not going to sustain any type of rally. It's likely to get caught in these range highs, right, up in this area and fail. So I would not be looking to take new longs on gold here. I would be looking for shorts. Now, there's no short signal right now. Okay, that's certainly not a short signal, and we've had some long signals. Hold on a second. Hold on a second here. Let me just. Okay, sorry. We've had long signals in gold, so this type of situation, it's aggressive for gold if you're looking to take swing trades and something like this. But you have to understand that taking these long signals, gold is only reacting to the geopolitical stuff. So that's why I put no weight on this trend. I'd be looking for gold over the next few months or whatever to work its way back to the midpoint of the range. So short signals would be attractive up here at a range high. All right. There's no sell signals here at the moment. This is actually a buy signal, but I wouldn't be going along at this level. Does that make sense? So if you're interested in a long for gold, you should be looking at old resistance levels or new supports. That's where you should be looking, somewhere around there, which is what, 1835? I remember that 1835 was a pretty significant resistance for a while. So that would make sense as a new support, right? If you can get basically below 1850, that may be a good place to be looking for longs for something like this, whether it's the CFD or the futures, whatever it is that you're using. Anything lower than that, these levels here would be great for longs. Again, assuming you get the signal, okay, and you can measure your risk off of that. But that's what I'd be looking for. When markets look like this, they look strong, and you're like, oh yeah, this is easy. This is definitely going higher. No, you're going into some major resistances. And gold, the big problem with gold is the catalyst, right? That's why I have no confidence in gold. It's the catalyst. We're not going into an inflationary environment here in the U.S. We're not with the rising rates, okay, which works against gold, right? Stronger dollar. And if this is reacting just geopolitical, what happens when geopolitical cools off? What happens if they say, oh, okay, we get along now, we all speak the same language, blah, blah, blah. Gold's going to go right back to 1700 or 1750, and all these people are going to get caught in gold. So I would be very wary of that. Another thing to consider for gold, if you want to play this game right now, smaller time frames, right? You'd have to day trade gold, which is extremely hard to do. I wouldn't day trade gold, but that's the only way you can control your risk in these situations if you're going to do it. You have to really stay on top of that. All right. Anyway, so I hope that answers your question. Alex, ruble. Oh, I guess there must be stuff going on with that. Let's see. What is that? Is that ruble? Yeah. Oh man, that's what happens when you start trouble with other countries. All right, man. So let's take a look at a weekly. There's nothing you can do with that. Look at this. I mean, obviously this thing has been weak for some time against the dollar. Look at this. Look at the lower high over here, right? Look at that. And now it got hammered. You can't touch this right now. I mean, that thing can bounce at some point. So what you want to do, that's definitely one to look for shorts, but not at these levels. It makes sense here. Let's go to the daily. You want to be looking for shorts at any ideal would be like this level here, which is what? 0126 107 area right there. Again, that's against the dollar. Or this would be a good situation for proportions, okay, using your fib tool. My students know how to do this. Now, you can measure from a couple of places. You could measure from up here, and you can use those levels as your reference, okay? A lot of times it's good to use the bigger range, carries more weight, but you can also use this range high. I mean, that's a pretty significant move. You could measure that one as well and look at those levels. In fact, the two levels overlapping will give you resistance zones that you can work with. Those would be good reference points for shorts if you can get the signal there. All right, so I hope that makes sense. But again, this is obviously being affected by the geopolitical situation. If they repair that situation, this thing, you know, shorting it may not make sense at that point. All right, but we have to see. Anyway, thanks for pointing it out. It's certainly not a currency I follow. All right, so let's move along here. Hey, Schenk, good to see you. I haven't seen you in a while. From Vienna, right. Have not been, okay, but I'm watching. Oh, cool, cool. I'm glad you're still watching. Oh, look, we got the Russian porn guy, but he's got a Spanish name, Alejandro. No one watches the Russian porn here. I'm sorry, man. I told you a million times. Like, if you want to spam, my channel is definitely the wrong one to spam. I only have like not even 30 people here. So go find yourself like a fake guru that's got like thousands of people watching on a live stream and spam that. Okay, you'll probably get a better click-through rate. I can't believe I have to give spamming tutorials on my channel here. Like, you must be a novice, really. Like, who spams my channel? I have like 16 people watching right now. Like, you're wasting your time, man. Now, if you want to get into my training program, then you can do that. But otherwise, stop with these Russian porn sites. Russia's got problems right now. They shouldn't be producing porn anyway. Let me get that out of there. All right, Ben. Hey, Ben. Good to see you. Ben, I saw a message about about getting into the chat room. I have to approve. I have that security bot in there, and I have to approve people, right? Because I don't want people that shouldn't be getting to the chat room, that shouldn't be there. So I haven't gotten in there yet, but I'll approve you, and you'll be able to see all the channels and stuff. Just so you know, I haven't gotten to it yet. Let's take a look at Bank of America. So now look, this is a financial. It's a heavy financial component of the S&P, right? The banking sector. Look at this double bottom. So the banking sector, clearly, that's not bearish, okay? There's nothing bearish about this. Higher lows, right? Possible higher low situation. So it's having a little bit of a hard time up in here. So we can argue that this is range bound and you're at the low part of the range. All right, so that all makes sense. Now let's go to the daily chart. And there's a nice weekly pin bar in there too. Let's take a look at the daily chart. So, I mean, as far as swing trades long, you're at the location, all right? Now, of course, rising rates are generally a good thing for banks because they, you know, their profit margins, of course, increase on something like that because now they can, whatever, right? They still borrow the money cheap and they can lend it at a higher rate or whatever. So typically, I believe rising rates are good for banks. Now, so you're at a good location for a swing trade long. Your risk can be defined, what is this low here? 42.06. So in a situation like this, you have to look at this area right here as far as profit potential, 48.60. So you're looking at like maybe, what is that? 4, 5, 6 points maybe, something like that. 48, that 48 area. That's where you should be measuring your profit potential from and your risk from here. So the reward risk in there is greater than 1-to-1, I would say. So if you're willing to take that chance, it's not a bad idea. Okay, that one would probably be good for options too, like a nice option spread, because it's not a wild mover. You know, the premiums are probably going to be very low, and plus with the spreads, you know, you're getting it cheaper anyway. So this is not a bad idea. Again, if it breaks this support, then you're going to have problems. Now, keep in mind the S&P. Let's take a look at the S&P, because whenever you're talking about, especially a market stock like this, you have to keep your eye on the S&P. All right. The S&P, as you can see, recently has seen a lot of bearish activity, right? But it's not exactly a bearish trend. Look at the bigger picture. Here's the weekly on the S&P. This trend hasn't exactly changed yet. It's trying, right? This bearish activity is definitely more bearish than we've seen in quite some time, but that's because, again, the rates are not behind this, right? Interest rates are no longer helping this thing out. We're not getting the stimulus anymore. The Fed is no longer behind this. So we keep getting these bullish pin bars. If we get some follow through here, all right, that should be good for Bank of America, right? And that should be supportive for a swing trade idea. But just keep in mind, right? That's a weekly chart. Keep in mind, the S&P and Nasdaq, they've been establishing these lower highs, and until resistances get broken, I will suspect that we're either going to stay in a consolidation, right, or possibly test the low again. That's what I'd be looking for on these things. So that can also give you a better price for Bank of America if we test the low and don't break. If we break, then we're looking at moving a little lower. So this can be like some sort of temporary bearish structure, but man, it's got a long way to go before it really proves to be significantly bearish, right? That's why I would be watching these lows very carefully. There's probably going to be some nice swing trade opportunities in those locations. And I'm talking about stocks in general, not just the S&P, right? The S&P helps us time those. All right. So anyway, thanks for asking. No, yeah, DJ, I see DJ's laughing. No, I get that link. It's the same link every time, right? It's like this Russian porn guy. Someone mentioned that it was a Russian porn link or something. I don't know. I've never clicked on it, but I keep telling the same. And the guy comes in here and he still continues to share that link. Obviously, he doesn't learn very well. He's a slow learner. So, all right. So that's Bank of America. Erhan, okay, from Turkey. Welcome. You make your technical analysis on Bitstamp, which is a spot exchange. Is there any reason? Actually, Erhan, that's a good question. I get that question sometimes for Bitcoin. I only choose that because it's just a clean chart, because I have other Bitcoin charts that have stuff on them. So I want to show like the clean chart and just as far as certain levels and stuff like that. So that's the only reason why. I mean, it doesn't matter if you use Coinbase. It doesn't matter if you use Bitstamp. It doesn't matter if you use a futures chart. It's all the same, basically. The patterns, the price structures, and the levels are the same, right? It's the same stuff. So I just use it because it's just a convenient chart. So thank you for asking. Some of the traders think that making analysis on charts of high volume, perpetual, well, it's going to be a matter of personal preference, Arhan. I can understand the volume argument, but you know what? If something like on BitMEX has some kind of wild move, do you think the spot is not going to have the wild move? Otherwise, there'd be a huge arbitrage opportunity, right? And usually those aren't around for very long because they get arbed out quickly, right? So it doesn't matter. Basically, it's the same. Again, it's just a matter of personal preference. But good question, though. Alex, coin looks attractive buy. Bought some at 180. Okay. Let's take a look. Coin. So that's Coinbase. Speaking of Coinbase. Now, again, Coinbase is going to follow Bitcoin, right? I mean, that's just going to follow Bitcoin. So Coinbase, look, you have a nice double bottom in play. But if Bitcoin fails, which is a possibility, Coinbase is not going anywhere. So just something to keep in mind. Look, Coinbase is also inside of this consolidation in here now. So if you're looking for aggressive swing trades or whatever, and you can get one-to-one out of that, that makes sense, right? That's not bad. You said you bought some at 180. Where's this thing right now? At 190. Okay, waiting for 150 and 120. Right. But buying more and more into this thing, if Bitcoin goes to like 30K or 25K, you're going to be taking pain in this thing because it's just following Bitcoin. And one liability with Coinbase is, they're in a very competitive business, and if they don't report like good numbers and this and that, the stock will get hammered. So you have that to deal with again, because remember, they're exposed to the altcoins and everything else. And if the altcoins go to zero, this thing is probably going to feel some pain. So from more of a fundamental perspective, just something to keep in mind. Otherwise, yeah, technically you have some things working for you here, but just keep in mind you're following Bitcoin, okay? So anyway, thanks for pointing that out. What else do we have here? Okay, Alex, Schwartz is not... Schwartz! Where's Schwartz? That's right. Maybe the Russians captured Schwartz, because he's an international man of mystery. And yeah, I'm worried about Schwartz. I should have canceled this stream without Schwartz. Yeah, Schwartz is a busy man. Okay, so I'm going to have to contact him with my secret network of international men of mystery and find out what's going on with Schwartz. Thanks for mentioning that, Alex. I forgot. How can I forget about Schwartz? DJ. Okay, good. Good to see you, DJ. Good to see you. Yeah, you're an analyst now, Kai. That's right. Well, the students that graduate into the analyst room, you're now analysts. I'm expecting analysis out of you. That's why I'm calling you analysts. Alex, if I read your ebook, can I? No. It's only for the people that go through the training program because I want everyone on the same page. The ebook touches on the same subject matter, but not in the same detail. You have to understand the ebook, you're pretty much like on your own with it. In the training program, I'm personally evaluating your homework assignments, and there are 8 of them. So if you don't go through that robust process, I don't want people in the chat room. So, and plus, the other big thing for the chat room is the ability to follow instructions. If people don't follow instructions, getting kicked out. People that go through the training program and they don't follow instructions, I'm not even going to invite them into the chat room. Because again, I can't have people like doing all these things all over the place. If you can't follow simple static instructions, you have no chance in the market. And I don't want people in the chat room that can't follow instructions. My instructions are simple. It's just amazing to me how people, they don't read the words, or maybe they don't understand the words. I don't know what it is, but I ask for one thing, and I ask for apples, and they give me oranges. You know, and I'm like, but I asked for apples, though. Yeah, but here are oranges. Yeah, but if you can't see that, then, you know, you're not going to do well in the chat room. And I don't want your analysis in the chat room. You have to understand that the chat room is a team effort, right? It's not just me sitting there, oh, let me look at your analysis, and I'm going to say if you're good or bad. No, it's a team effort. I'm looking for signals. If I see signals, I share them. You know, and I'm looking for a team of people that are interested, that are genuinely interested and motivated and you should be practicing. It's for your own benefit, right? It's for everyone's benefit to share your charts. There's no reason to be shy. Everyone's been through the same process. That's why I set it up that way. Okay, anyway, so good question. All right, yeah, DJ, right. This guy's like a porn guy or something. All right. Stian, hold on. YouTube is blocking some of these messages. If I need you, maybe the Russian porn start has a. Yeah, I don't know. Chris, can we check Netflix? NFLX. Yes, let's take a look. NFL. So Netflix, as you know, is part of the FANG situation, right? So it's going to be correlated to the NASDAQ. As you can see, this thing get nice and hammered. Very nice. And since then, it established the bullish, look at the nice double bottom, okay? So now that's a change, but I wouldn't, some people are going to jump on that and say it's a trend reversal. It could be the beginning of one, but it's got a long way to go to prove itself. So I would not buy this now. It's aggressive. Buying this now, right now, your risk is going to be defined by that low. And that's a long way. So where are we right now? This thing's at 394. And the low is 355. So you're looking at, what is that, like 50 points or whatever of risk? That's a lot of risk for this thing. So I think for something like this, you're also in the middle of this range here. And the S&P pulls back or NASDAQ pulls back, this thing's going to pull back too. I don't think that the risk is just unnecessary. So I would wait to see if you can get another test of low if you're looking for an aggressive swing trade. Why is this an aggressive swing trade? Why would that be if it tests the low again? I mean, it's a support, right? It's a double bottom. If we test this level right there, why would that be aggressive? Because the structure's against you. And there's a good chance that it breaks. That's why it's aggressive. You know, taking longs when the structure is with you is the higher probability thing to do, or the more conservative thing to do. Right? We don't have that situation right now. This could be the beginning of a new situation, but I just find it hard to believe because of the catalysts or the negatives that are in the market right now, like the rising rates, you know, the uncertainty with this Russian situation, and any negative thing comes out and S&P sells off, where do you think this thing's going? So something to keep in mind. I mean, this thing's going to be more correlated to the NASDAQ, but NASDAQ, S&P, they're all moving together anyway. The main thing with this is to get that more favorable situation, You want to see resistances get taken out. Right now, the only resistance that really matters right now is going to be this one. That's the gap resistance right there. So price is going to have to work its way up there, pull back, and then that would probably be a more attractive opportunity. So you get some time on this thing, unless you're interested in that more aggressive trade right now. But you're going to see these double bottoms across the board. You're going to see these Bank of America also had like a similar double bottom. You're going to see them across the board. Use the NASDAQ, use the S&P, right? That's where your timing gauge is going to come from. A lot of these stocks are going to look the same. You know, it's all the same position. It's all the same trade. All right, so let's move along here. Okay, let's see. Peter, if you can say which broker company you will recommend. Well, you know, as a U.S., being located here in the U.S., I can only use certain ones. So Coinbase, you know, Coinbase Pro is the one that I use for that type of stuff. Otherwise, I use Interactive Brokers pretty much for everything else. You know, there are others, TD Ameritrade. There's one that I like. I don't use them, but I like what they say, and also I'm very familiar with the guys that put it together. It's called, what's their name? Tastyworks, okay? It's Tom Sosnoff and those guys. They used to run Thinkorswim, right? And they sold Thinkorswim, and now they started this one called Tastyworks. They, you know, I know they're limited, they're not available in every country, but I like their story. And usually those guys are ahead of the curve. Usually they understand how to put tools together from the trader's perspective. And I've been following them for a long time. And usually they're more in tune with that compared to these corporate bozos, like, you know, TD Ameritrade takes over, and then you get the corporate mindless bozos that start putting in what they think traders should have or whatever, or they basically just cater to the herd, and you know, then you get a lot of garbage tools and stuff like that, and then everyone wonders why they can't make any money. All right, so yeah, so that answers your question, Alex. I was talking about dollar cost averaging with Coinbase. Yeah, I don't know. Coinbase is not a high quality asset. It's a broker, okay, and basically they're like a broker, and they're in a very competitive environment. So unless their instruments do really well, like, you know, everyone trades all their garbage altcoins on Coinbase, I don't know. You know, yeah, they're the regulated one at least, and they have a few things like that going for it. They're probably the leader. You know, they're a leader in the industry, which is a good thing. But as far as when it comes to dollar cost averaging, I prefer high quality assets. Coinbase is a growth stock. Okay, they don't pay you to hold on to the stock. There's really no reason to hold on to them. All right, something like an Intel makes a lot more sense. I mean, look at Intel. Intel got beat up recently. Wow, what a bounce on Intel. Someone brought up Intel the other day. Maybe it was you, but Intel, that's a quality stock. Okay, they run their industry. You know, there's a much better reason to hold on to something like Intel for that type of thing. Anyway, but that's your opinion. All right, Steen, can you have a look at, okay, Luna. Okay, thanks, Steen. Good. See, Steen follows instructions. All right, let's take a look. So Luna, interesting. Now, when you see something like this, first thing I want to do, take a look at the weekly chart. All right, let's see where we are in terms of weekly price action. How am I doing here? All right, a few more minutes. Plus, I see people are leaving the stream. So when I see that, it's like, all right, it's time for me to go too, because no, obviously people aren't interested. But look at this situation right here. So this is a nice move, but you're near the highs. So as we know, hopefully people have learned their lesson from buying near highs. This is a highly vulnerable area for longs. So if you're long, this is a great place to sell. Lock in profits if you have some. If you don't have any Luna, well, let's take a look. Where should you buy this thing? Okay, because obviously there's something going on here. This is most likely hype. Whenever I see this, this is most likely, you know, some chat room somewhere or some marketing team has effectively gotten some message out to all of their herd mentality followers, and you get that, right? So now people think they all go on their Robinhood platform and, oh, look, Luna. Luna's the place to be. I'm going to buy Luna. Hey, buy Luna right at the top. So this is not a good place to be buying. It's a good place to be locking in profits. Look at the resistances, right? Look at the resistance areas. So those are places to be getting out, not buying more. where should we buy? If you want to buy this thing as a swing trade, where should it be? Well, you have this area right here, right? It's an old resistance. What is that? 59. So basically $60. How much is this thing right now? 84.89. So you're looking at a good $30 pullback potentially, right? This would be an attractive area for a new swing trade long if it provides such an opportunity. Another area, look, you have this old resistance there. Hasn't really been acting very well since then, right? You have like this congestion area right there. But if you want to look at the midpoint of that, which is what, 69, so basically $70. $70 would be a more aggressive, but much better than buying it here. That would be another area to be considering along. What you can do basically between these two lines that I drew here, you can basically just say, look, this is the buy zone, okay? You can also take the fibs and you can say, okay, I'm going to measure this low to this high, and look, that overlaps the buy zone, right? So that those prices would be good areas to be looking for a new long, if you're interested in a swing trade long. Otherwise, there's nothing to do here but lock profits in if you have a good price. Anyone that buys this thing now, you're taking an enormous amount of risk, and you hope, maybe you don't know where this goes yet, you don't know the story yet, but you'll find out soon. Okay, I sold all my Luna for Bitcoin. I'll buy it back again at lows. All right, nice job. Yeah, if it was me, I bought it there. Okay, DAX. Okay, Kai, sure, DAX. So you guys see, I like that. You guys follow instructions. I asked you to remind me, and now you guys are putting it in channel. Cool, thank you. So here's the DAX. This is the, what is this? This is the index. All right. Yeah, I guess I could work with the index here. Probably the futures would look better, or the CFD. Let's see, is there a CFD here? DAX EUR. Let's see. That's probably a little bit cleaner. Easy markets. All right, I guess this is the CFD. All right, so let's take a look at this here. Is there another symbol for this? Let me see here. Oh, okay, I can do that one. Let me see here. I'm just looking at the symbols. Okay, so I can do this one. Let's take a look at this one. All right, they're all the same. So here's the thing. This is going to, generally, the DAX is sort of like the Dow, right? It's like the German version of it, or the European version. It broke that support. Look at that long time support that went back quite some time, right? Almost a year. It broke that support. That's not exactly good, all right? In such a generally strong uptrend, this thing has been in a bullish trend for quite some time. That type of support should hold and be respected. It's not. It's broken. So what that means now, looking ahead, is I would be anticipating resistance at that old support. And if you're looking for positions, this would most likely, that would be an area, or maybe you want to give it more of like a zone, a range. Again, you can go to your fibs and look at those levels. Those would be reference points for a potential short, all right, if you're interested in selling the DAX. So you just have to be careful, though. Again, make sure you define your risk carefully. If for whatever reason things change, right, and it just blows through, you don't want to get caught in a short in that type of situation. So you have to make sure that your risk is very well defined, and that you take the loss if you have to take the loss. But right now, I certainly would be looking for the short side. As far as the long side goes, you're dealing with a broken market now, right? So in that situation, you have an inside bar situation right here, okay? If you take out the high of that inside bar, that will be a long signal. Now again, this thing tends to follow U.S. markets. And as you can see, the U.S. from Thursday to Friday, the U.S. had that dramatic bounce. So the DAX is probably going to participate in that a little bit. If you want to take that aggressive swing trade long, you're looking at basically, again, going into that resistance level and hopefully getting greater than 1-to-1, or at least 1-to-1 for the risk that you have to take. Does that make sense? So that's how you can work with something like the DAX. these, an index like the DAX, I mean, I basically consider it like the S&P or the Dow. I'm open to both longs and shorts on something like this. You can make some nice money on the short side of these things. People say, well, why would you short that and not Bitcoin? Because these markets are regulated. All right. So anyway, good question. Thank you for asking. Let me see what else we got here. So, yeah, okay, I sold my loan. Okay, Alex, I sold it for Bitcoin instead of USD. Okay. TSM. Let's see, what is that? TSM. Oh, how can I forget this one? Taiwan Semiconductor. All right, so look, the semiconductors, again, they're going to be affected by the NASDAQ and whatever's going on there. Plus, I don't suspect them to do well in the rising rate environment. These are typically growth stocks, right? Typically. This thing's at a pretty significant support, just like Intel was. Very significant support. And you're fighting, though, a structure. So here's the thing. It's a conflicted situation. You have a lower high right there. It's at the, it made the lower low, it broke this support, and now it's at this more significant support. Something like this may be a good one for investing. Again, it's a growth stock, but it's a well-known industry leader, at least. It has some of those things going for it. But again, this thing, if it breaks that support, you're looking at significant pain. So you have to decide how you want to handle that. But as far as a long from this location, you're certainly in a good location for a long. There's no buy signal at the moment, but if you take out today's high, 109.74, this thing closed at 106, basically 107, then you're looking at a long signal, right? But how high can that long go? In these environments, when you're fighting a bearish structure, your expectations should be lower, right? So you're looking at resistance there, plus you have this gap over here. Maybe that's because of a bad report, or maybe that's because of that overnight S&P problem. I don't know what that gap is there for, but those gaps tend to act as support or resistance levels. In this case, a resistance. So you have to look at your potential reward based on something like that, and maybe the possibility of it reaching a little higher if the semiconductors, maybe they come out with some good reports or something or whatever, and maybe this thing can benefit from that. But otherwise, I'm not expecting rally mode, right? I'm not expecting the nonsense that we've seen over the previous 2 years anytime soon until Powell changes his tune, right? Or actually, I shouldn't even say that because Powell is behind the curve until the bonds change their tune, because I suspect that, why do the bonds price it in? How do the bonds know 6 months in advance what Powell is going to say? Or Powell just so happens in December to say, oh yeah, I'm going to raise rates, right? Where was he in August when the bonds reversed, right? Why wasn't he saying it back then? What was he saying back in August? Oh, transitory. I'm still trying to figure out what that word means. That's what he was saying in August. And then in December, I made a mistake. I'm raising rates. Okay, thanks, Powell. Anyway, the reason why I mention that is because that can affect this. And the bond market, so my point is, when the bond market turns and the bond market proves itself, then these things, like these semiconductors and other growth stocks, will probably be a good choice for accumulation. But until then, or I should say, accumulating in your favor than rather against you. Because right now, is Taiwan Semiconductor a bad choice for accumulating? No, it's a leader. So I wouldn't be against this one, but just realize you're going to be accumulating in a negative environment. So you're going to be taking pain most likely on that. So what would you rather do? So you can, is that a bad thing? You can just accumulate less, right? You can skew smaller based on your goals. And then when the environment changes, then you can skew higher on the pullbacks or whatever. Again, it's all about risk and protecting yourself. When you're playing the averaging game, you're not using a stop. So you're exposed to a lot of risk. And the only way to control that risk is with your size. People get turned off by that because you know what they say? Well, if I only have 5 shares of, whatever, what good is that? I'm making like no money. Yeah, it's a waste. Well, no, because you can accumulate 5 shares, 10 shares, 15 shares, 20 shares. Next thing you know, you have 500 shares. Or 1,000 shares from a really good price. Now that's a significant number, okay? And that thing runs up 10 points. You have $10,000 profit right there, right? So people don't realize that. But in order to control that, people want to go all in and say, oh, I'll buy the 1,000 shares now. Bad idea. But if you accumulate those 1,000 shares over a 5-point range or a 10 or 15-point range, you're going to have yourself a good price, and you're not going to be stressed out when the market gets ugly. Because of the type of environment we're going into, there's a lot of potential for ugly market, right? An ugly market, what do people do in an ugly market? They bang it out, or they get margined out of their positions because, they were a genius and they bought their 1,000 shares at a bad price. And now they can't afford the margin, so the broker kicks them out, right? And that's where you want to be buying your small shares. If you're protecting yourself in terms of risk, you won't be in that emotional position or in a situation where you can get margined out, right? Unless, of course, you have a very small account. Right? So you better be familiar with your margin requirements. But the point is, you want to be in a situation where you're a strong hand. People don't like the strong hand because people are focused on making money. But you can't be focused on making money because it invites emotion into the game, and you're going to make emotional decisions like, yeah, I'm going to make $20,000, and all I have to do is throw in 2,000 share position, and hopefully I'm right. But you're playing a random game. Okay, you can flip a coin and probably get a similar result. The problem is, you can't hold on to losing positions because of margin often. That's the problem, right? They kick you out. And who makes that money when you get kicked out? If it's a Forex dealer, the Forex dealer's pocketing that money, all right? And some of these stock situations, people don't realize. Like with something like, what do you call them? Robinhood? People, oh, Robinhood, they're so good. They're free commissions. I'm so happy. Robinhood sells your order flow. Oh, who cares? It doesn't matter who takes the other side. It does matter because the market maker sees your orders coming and they're possibly on the other side of your trades. So when you get kicked out, guess who makes the money? Okay, so you need to understand that kind of stuff and how this game is really factored against you. But Robinhood traders usually aren't concerned with that. They just want to make money and follow their next favorite fake guru. Anyway, all right, so I'm going to wrap this up here. How am I doing here with time? I've been talking a lot. My voice is starting to hurt. Let me see here. Okay, have I answered everyone's questions? Okay, they add up quick. Right. You can buy 5 shares here, 5 shares there. Of course, it's always a function of your account size. If you only have a $5,000 account, you're not going to have the same flexibility as someone with $50,000 in their account or $500,000 in their account, right? It's different risk profiles, and you need to respect that risk. You cannot trade a $5,000 account the same way you can trade a $500,000 account. It's not the same. There's a lot you can do with a $500,000 account, and there's a lot less you can do with a $5,000 account. So the strategy you choose for those type of accounts is going to be imperative, especially the smaller accounts, because you can't afford to take a lot of risk, right? If you think you're going to turn your $5,000 account, not you in particular, I'm just saying in general, you think you're going to turn that into $25,000 in a couple of months because you watched some fake guru video showing, oh, look, I turned my $5,000 account into $150,000 in just 5 days. And you can do it too. Right? Just use my magical oscillator. That's what they sell you, that dream. If you think you can do that, quit the game now. I'm telling you, because you're going to lose your $5,000. You can't turn that kind of money and generate that type of return without taking an enormous amount of risk. So people say, well, how much risk should I take? Realistically, a professional money manager, and I'm talking about a professional that this is all they do. Okay, a professional money manager is looking at typically 2% of their portfolio, right? Or whatever. That's a standard number. 2%. So, 2% of $5,000, what is that? $100. So that's the kind of risk you're dealing with. And if you're risking more than that, your $5,000 is not going to, you're going to wipe out your account soon. You can't be taking 10% risk, 20% risk. You can't be doing that because you're going to be wrong, and the losing trades are going to be too expensive, and you're not going to be able to make that money back. Okay? So just so you know, like I said before, when I started out this stream, there's very little skill in this game. A beginner can come in with no regard for risk. They could put on a huge position. The market happens to work out. And now they think that they're a genius, right? They think they got this. It's easy with no regard to risk. And then they wipe out their account. So don't mistake skill. Don't think there's any skill, right? The skill really comes in. It's not about charts. It's not about oscillators. It's not about how good you are reading news and all that other nonsense, which is complete waste of time. The skill is really in risk management and understanding the numerous ways to manage risk and having a laser focus on risk. What can I lose? And also expecting to lose. You should go into this game expecting to lose. It's counterintuitive, but it protects you. That's the whole idea. Being defensive, right? That's the idea. People don't like that idea because it's counterintuitive and it's not about the romantic idea of making money, right? Making money by just pressing a button. It's a romantic idea. In order to make money like that way, especially with a large account, right? You think you're going to throw around big money and blah, blah, blah. In order to do that, you need to be capitalizing on a very specific inefficiency or what they call, an advantage of some kind. And that's why no one shares that information. It's a secret. You know why? You know why no one will really share that statistical advantage is because if others find out about it, the money that's available, the profit that's available in those situations will vanish because everyone's jumping in on the same thing, right? Some smart algo guy will program it into the system since there's a statistical advantage, and the robots will eat up all that profit. Okay, so that's why when you have a true statistical advantage, you don't share it. No professional will share it because they can't, right? Talk to any professional money manager. They'll tell you the same thing. So all these clowns, all these morons, all these fools that come out and they say, I'm going to share with you my secret method, my secret blah, 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 blah. All those people that come out with that, just pay me $1,000 and you can have the secret too. It's all nonsense. They're not sharing anything with you. Because if they had a true statistical advantage, they would just be making money with that, okay, and not selling it. So just something to keep in mind. I have to repeat that a lot because people still don't get it, but that's the way it is. Now, my 6-step method, by the way, if you read my website, it clearly states there's no statistical advantage to any of it. I'm not selling a statistical advantage. I'm selling a method that helps basically fine-tune your thought process and your decision-making process so that you have a practical perspective, okay, and that you can better gauge probability and better gauge where things are likely to be more favorable for you, but most importantly, gauge your risk. Right, that's why my I don't expect my training program to be very popular. I don't expect a lot of people to be buying it or paying for it because I don't sell any kind of dream. The people that are going to buy my program are only people that are truly interested in actual measurable results. And you want to know how those results are not measured in profits, as again you would think. Intuition says, yeah, right, profits. No, it's measured in the reduction of losses. Okay, so if you're able to avoid losing trades, that means you're retaining your profits. So when you have a winning trade, you keep more of it, and over time, you start to preserve money in your account, and your account grows. That's how I've learned to make money. Okay, not the typical, I made $20,000 in one trade, I'm so happy. That's a gambler, and they don't win. They're part of the herd. That's the way it is. I'm sorry if I burst anyone's bubbles of dreams and the big mega mansion and the Lamborghini, but that's the reality of this game, okay, of market timing. If you don't like that idea, become an investor and benefit from long-term trends whenever they show up, okay? Like all these people from 2017 till now with Bitcoin. Hey, I bought Bitcoin at $1,000. It's at $40,000 now, right? You can do that, but you're also going to have to sit through it goes from 70K back to 20K. You're going to have to sit through those too. That's the nature of the game, okay? But as an investor, you just sit back and do nothing. Anyway, all right, I got to wrap this up. I know I talk too much. I got some questions in here. Let me see what people are saying. They're probably mad at me now. Stian, okay. For a moment, I was concerned, but we got a good rant. Oh, okay. Yeah, see, I got them in there. I've just been so busy, I forgot to even rant. Oh, Farhat. Okay, yeah, I talked about gold. You can go back. I anticipate gold to be vulnerable at these levels. Again, I talked about all that with the dollar. All right, Kai from, okay. Stian, could it be a good strategy to sell if it goes up 30% in one candle? No. You know, again, because it's random. I understand what you're saying, because, you know, there is something to be said about like a standard deviation or something basically becoming overbought. There is something to be said about that. The problem is there's no way to measure if 30% is a good enough time to do that. Like, it's not consistent. So, you know, you may do it and it may work one time and then you'll do it again and then it'll just run you right over. Like, it'll just squeeze you hard and it'll have a ridiculous move. And you stepped in front of it because you're like, oh, it's 30%. That's usually over. That's a good place for overbought, right? It's not a good idea. Believe me, I've looked for all that. So that's why if you want to use that along with some form of confirmation, that can help. Like if it's up 30% in one candle and the next candle is a pin bar, bearish pin bar, then maybe that makes sense, okay? But stepping in front just for a 30% candle, generally not a good idea. All right, thank you for asking. And I bought back at the 618 fib level. Right. So again, it's going to work randomly when you do it that way. It makes sense, you know, because it's something that moves too far, too fast is likely to pull back, but it's going to catch you when you know, it's going to catch you on the wrong side. Believe me, it's going to catch you, right? When you step in front like that. So perhaps you can play that game with more confirmation. If only I find a couple of trades like AMC. Oh yeah, I remember that, AMC. Well, herd mentality, right? Same with GameStop, right? That was basically the same GameStop situation. Square started to break some resistances after a lot of time. Square, all right, I haven't looked at Square in a while, but Square, yeah, okay, look. So Square, there may be some, that's a nice little gap you have going on here. I like that. That's a nice little gap there, bullish gap. You're pushing some resistances here, yes, but this may be a change, but the thing is, Square's a NASDAQ stock. So while this looks promising, you have to understand that there's a bigger picture here in play and going against rising rates. Now, Square's a financial company, right? Why is it called Block? Do I have the wrong one here? I thought Square was SQ. Square space, Square. Do I have the wrong Square? I thought Square was, no, it's the same thing. It's the same thing. Okay, I guess they changed the name or something. I don't pay attention to all that drama. But again, you have to understand that these stocks, they're going to have stuff working against them as a group, right? Let's take, how's PayPal doing? PYPL. Okay, PayPal's gotten beaten up. Look at that. PayPal's a good company. And look at that. Okay, so these, you have to look at the NASDAQ when you're going to judge these things, or the S&P. All right, let me see what else. Oh, Schwartz, there. Schwartz, I was so worried about you. I was, you know, someone pointed out earlier, Alex pointed out earlier, he said, Schwartz isn't here. How can I forget? The Russians got him. The Russians probably got Schwartz. You know, being an international man of mystery, you're involved in that stuff, you know, international conflicts and stuff. So I figured you'd be very busy in between the Ukraine and Russia and all that stuff. You know, top secret stuff. I know you can't tell me. But I'm glad you're here. I'm relieved now. I was going to cancel the stream. I'm going to have to cancel until Schwartz comes back. I got to find out where Schwartz is. I'm glad you're here. Thanks for stopping by, Schwartz. I can't do a stream without you being here. Okay. Yeah, we thought you were like on a mission or something. All right. All right, guys. So I'm going to wrap this up. I'm so glad, Schwartz, you made my day. I'm so glad you're here. Okay. So I think I've answered everyone's questions. Let me know if I've missed any. I'm going to wrap this up here because I talk way too much. So if you'd like to know more about Greenbridge, by the way, I've been working very hard. The reason why I've been absent from Greenbridge is because I've been working very hard behind the scenes to improve our signal delivery situation. Okay, I'm very unhappy with the technology that we're using right now. It's like, you know, our website would have been great back in 2010, not in 2022. So I'm moving Greenbridge over to the same server that we have, you know, my student chat room and all that stuff. And, you know, so there's some work involved there. I had to do a lot of research. I had to set up stuff, blah, 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 right? You don't need to know all that. The point is, I'm going to be moving Greenbridge over so that people can receive push notifications. And we could put a lot more valuable stuff in the server and all that kind of stuff. And people can get more signals more frequently, right? That's the goal. And if you want training, again, you can go to markpmarkets.com. If you want to understand, where I get my perspective from, I have quite a few students here that can tell you. They can tell you about the program. I got a lot of good feedback from it. I have to make some changes, like as far as improvements go. I haven't had a chance to do that because I had to set up the student chat room and all that stuff. But now that I have that set up, I'm going to be looking for my next group of students. I'll probably run some special in the next week or so to give you a better price if you're interested. I'm only looking for like 10 students. I can't do 20 because, again, you're getting my personal feedback in that thing. So I certainly can't. I won't have time to accommodate 20 students and provide that kind of detail. So I'm only going to look for 10, and then I'm going to cut it off. Right? Basically, I'm going to do that by raising the price to a ridiculous number so that people won't pay for it. That's what I have to do. Okay, so anyway, so just something to keep an eye out for if you're interested in the training program. Also, I get questions a lot about payment, like as far as how you can pay. At this time, I'm not able to accept Bitcoin payments. I want to, but the thing is, if I do it in a way that's not organized, it's going to cause problems, right? All kinds of problems. So I need to do it in an organized way, and I'm not set up for that right now. So I can only accept payments on PayPal. All right, if you're interested in that sort of thing, I apologize for the inconvenience, but I am planning to set up a way so that I could get and receive Bitcoin payments, but that's going to take me some time. I can only do one thing at a time, and it's only me working on most of this technical stuff. All right, so anyway, all right, you guys. Yeah, Avi. Oh, cool. No problem. I appreciate everyone from these faraway places that are. It's like 12 a.m., 4 a.m. I really appreciate you guys sticking it out. Let me see. I got some questions here. Farhat. Hey, BTC has been. I don't know about lead. I don't know about that. I haven't really noticed that. It seems to me it's just been following. It's hard for me to agree that it's a leader. But thank you for the observation. I'll pay more attention to that. Schwartz is a reason for I know Schwartz is a major player. It's him and Elon Musk. You got to be careful with those guys. Big dump yesterday, 2 p.m. Check 5-minute chart. Futures open. Well, there's some play with that futures stuff, but you know what? I don't put a lot of weight on that either because it's there until it's not there. I really think a lot of this activity has to do with the Ukraine-Russia situation. I think a lot of it has to do with that and how people are interpreting certain things and that kind of stuff. Right? So that's how I'm going to treat that. I'm not going to put a lot of weight into these other things. You know why? It just invites confusion. But if you find it helpful, go ahead and use it. But I'm not going to rely on that because, again, I've tried that. In 1 minute it's there, and then it's not there. Then it's there, then it's not there. And you might as well flip a coin, right? And you get the same result. I'm not interested in flipping coins. So, but anyway, thank you for pointing out. Thank you for those observations. All right, no problem. Yeah, okay. So yeah, and again, if you see some kind of pattern that you think you see, like maybe it's a futures gap, because I've heard lots of talk about the futures gap and this and that. If you see that, document it, right? And can you document 1,000 occurrences or 10,000 occurrences? If you can, then maybe there's some statistical significance. If you can only document like 2 or 3 occurrences or whatever, and then it's like not, and then it's there, then it's just random. And you have to understand something too. When you think you see a pattern, you have to understand that if it's truly a pattern, others, especially like algo programmers, will have spotted that pattern before you. And they will program a robot to capitalize on that pattern. And that pattern will no longer offer any value. So if it's random, then yeah, it's going to appear. And algo guys are not interested in random. They want a statistical advantage. So that's why most of the patterns that we think we see are actually random, a lot of them. Otherwise, they would be arbed out of the market. So you have to understand that. Keep that in mind. Okay, you guys. So yeah, I'm going to leave you with that. Again, thank you all for taking some time with me here today and all your great questions. Again, if you're interested in Greenbridge, just give me a little time. I'm hoping over the next few weeks to have that transition complete where I have all my Greenbridge members into the chat server. And then I think everybody will be much happier with the quality of that situation. Andrew's been working hard on keeping that thing going, and he's been doing a good job. I know a lot of people are impatient and angry, and I apologize, but I am working on that. We're not just like going to let we're not going to what do you call it? We're not going to abandon Greenbridge or anything. We're keeping that going. It's just when there's only two people and he's busy doing other stuff, it's very hard for me, one person, to get all this work done. Okay, on top of training students, on top of everything else I'm trying to do. All right, anyway, so I know, no excuses. But anyway, so please be patient with that. If you're interested in my training program, you know, go to markpremarkets.com. There's a link in the descriptive portion of this analysis. If you have any questions, the best place, just send me an email at mark@markpremarkets.com. I try to get to those more frequently if I can. Sometimes it takes me a day or so to respond to those because, again, I have my chat that I have to get to. Like, I have lots of stuff going on. All right, so again, I'm just letting you know. So thank you all, everyone, for spending some time with me here today. Join me next week. I'll be on next Monday. I'm trying to get back onto TradingView as well. Maybe by next Monday I can get back on there. And if I can, I won't be able to talk about my training program anymore because they have house rules. All right, you guys. So again, thank you so much. And enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you for watching.